the headline number is in the twos, but when you strip out food and energy, which they do for core readings like the PCE, the Fed's preferred measure of inflation, the personal consumption expenditure, and the CPI, consumer price index, you get a higher number because oil has been bringing it down. But don't fret, inflation is falling like a rock.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Scottsdale, Arizona. Lenders One is putting on their executive roundtable. It's a healthy group of C-level executives recapping the year, what's working, game plan for next year, a little mastermind session. Good old Steve Scanlon from Rewire is out here. Rewire has 19 coaches, do a great job with mindset. Okay, happy Veterans Day. I'm sure you've seen some really great posts, and I have too, here on LinkedIn, honoring our veterans today. It used to be called Armistice Day when World War ended in 1918 at 11:11 a.m. on the 11th month of the year, the 11th day. So there's still a ceremony that goes on every year. And of course, it was renamed by President Eisenhower, who passed the bill to be Veterans Day, to honor all veterans. And cannot thank our veterans enough and honor them for, literally putting their life on the line for this country and our freedoms. And one of our most amazing freedoms is our election process last week. The fact that, we can voice our opinion and no matter who we are in this country, and seem to have gone pretty orderly, and our vets put on the line for all of our freedoms. And yesterday was the 249th birthday of the Marine Corps, and 249 years of success on the battlefield with a legacy of honor, courage, and commitment. It's pretty impressive. I think I was 7. I just turned 7 when I first really resonated how badass the Marines are. If you remember, in 1983 in Beirut in Lebanon, the Marine barracks were bombed, and 241 people were killed, and 220 of those were Marines. I think something like 18 sailors and someone else, and then there was also a couple other personnel. There was another bombing that killed 59 French paratroopers. So, hats off to the Marine Corps. Got a lot of buddies. Man, went to my 30th high school reunion over the weekend. Hang out, a couple buddies of mine, some are ex-Marines, just having a beer, sharing stories. We would say war stories, but that would be disrespectful, especially on a day like today, when we're honoring people who literally went to war. Happy Veterans Day. Very honored to be part of this country. Okay, let's talk about the CPI report, PPI report, inflation, the Fed's actions, the velocity of money, and some repercussions coming out of the election from last week. So this will be a juicy one, and I'll try and do it pretty quick. As I walk this 42-acre complex here in Scottsdale, the Plaza and Villas. It's actually pretty. It's a little chilly. Okay. CPI, Consumer Price Index. It's the second preferred major inflation data point. It is a tier 1 data point. It's a big deal. And that comes out on Wednesday. So the Consumer Price Index, if it comes in at 0.26, then it'll get rounded up to 0.3, and it'll be 3.4% year over year on the core CPI. See, energy prices have been low. We've had low cost of gasoline and heating oil because the price of oil per barrel has been low. And so the headline number is in the twos, but when you strip out food and energy, which they do for core readings like the PCE, the Fed's preferred measure of inflation, the personal consumption expenditure, and the CPI, consumer price index, you get a higher number because oil has been bringing it down. But don't fret, inflation is falling like a rock. We've been hearing, for 2 years we're going to be in recession and inflation is going to wreck this country, and it just hasn't happened. Our GDP is growing, but so is our debt, and I'll get into that in a second, and how the Fed's actions and this new administration might impact that. So if you look at CPI, if it's at 0.26, 0.3, we go to 3.4. If it's at 0.24, it's only 0.2 month over month, and you add that last number to the index, and you'll have a 3.3 reading, which is the same as what last month is. So will the perception on Wednesday be that we're going up, whether we stay the same? And the producer price index comes out on Thursday. That is the price of inputs for producers for costs for goods and services and whatnot. Now the CPI is heavily weighted on inflation. On shelter. Now the last 60 years, 60 CPI core reading averages 3.8%. Okay, 3.7%, and the last 40 years is 2.8%. So, is it really all that bad? If you take all the inputs in there, okay, the median prices of all the CPI inputs is only 1.86. It's low. It's shelter and auto insurance. That's it. That's what's lifting it up. Now, remember, this is an index, which means they take 12 monthly readings and add them all together. So the one that's 12 months old is getting replaced with October. And, the Fed said in their meeting last week, Jay Powell in his Q&A, there's some lag effects in there. And some of these, like owner's equivalent rent and some of the housing components that are older are still kind of lingering around and keeping that number inflated. Barry Habib and the MBS Highway did a great job of showing a breakdown of those inputs that are going to be removed for October and then November and December. So in January, there's an input that's really large that, if we have a 0.2 or even 0.3 reading, it would bring that overall number down. So hat tip to them. Inflation is falling like a rock. Obviously, shelter is a little bit stubborn, and that's what higher interest rates, tackle head on. Now, the Fed they cut 25 basis points. It's 75 total that they've cut. If you want to see how low they're going to go and where their terminal rate is, where they're going to end, watch the 2-year yield. The 2-year Treasury is the, quote, market rate. And that's where the Fed wants to get the overnight Fed funds rate. The 2-year Treasury yield mirrors that in the short term. Money that's borrowed, they tend to track. So that's where the Fed wants to get the neutral rate down to and the terminal rate. They want to get down to wherever that 2-year Treasury yield is at. So we'll see if that thing goes up or down. Right at the election, after the election, all the yields went up. 10-year Treasury yield is really what mirrors mortgage interest rates. And that went up a little bit the days after. But on Friday, they all came down. The 10-year Treasury came down from a 440 peak down to 430. So the bond market was closed today. We'll see what happens the rest of the week. The inflation number will definitely impact that. Now, there's more money in the system. The Fed is cutting. There is going to be more velocity of money. It should spur economic growth, and that's good for GDP. Could it cause inflation? It's all speculation. And what else is speculation is what the Trump administration is going to do. There's a lot of talk about tariffs out there, but it's actually the least known of what they're going to do in our policy. We know he's going to use it as a threat to get China to the table, just like President Biden did, and just like President-elect Trump did when he was president before Biden. So I don't know where it's going to land. The difference, I think, between now and 8 years ago when Trump took office for the first time is that our debt to GDP is much higher. So there's a lot of fear. And I heard a really good CNBC clip today. Someone said the fog of the policy. So what's the fog of the policy going to be? We don't know. It's foggy. It's uncertain. So we got some certainty with the election. We have a Republican Senate, Republican administration, and a Republican House that's looking like about 11 seats. But we don't know exactly what they're going to do until it's time for them to do it. Between then and now, they call this session between the presidential election to January 6th, they call it the lame duck session. That's just because, there's a transition period that's going on. But there's a lot getting done in this lame duck session. Let me make sure I go on the right house here. Okay. So the Senate has 30 judicial seats waiting right now to be, confirmed. So there's a continuing resolution going on for the budget. And our current budget expires, I believe it's December 20th, if that's right. So this administration is going to have to do something to get a budget passed. And if they're wasting time on that budget, then they might not be able to get those 30 seats done. So will the Trump administration ask for Congress to pass that budget more quickly, the continuing resolution, or what are they going to do? So So we're going to watch that. Obviously the new Senate Majority Leader is being voted on right now. There's two establishment Republican candidates, John Thune and John Cornyn, that are trying to take that spot. And then, of course, the leading candidate right now is Rick Scott, senator from Florida, former governor of Florida, big Trump-backed candidate. So that's why he's leading right now. There's something you hear all in the press, the mandate. When President Trump won this election convincingly, both not just the Electoral College with over 300 votes, but also the popular vote, he's going to wield that power and say, hey, I have a mandate. So you'll see a lot get done in the first, 90 days of him being president. That's what they say. The first 90 days is something you hear a lot about. But if they're screwing around with trying to get a continuing resolution done for a budget and kicking the can down the road from this December into March into April, it could get in the way of what he's trying to do. So it'll be interesting to watch how that plays out, because those policies do matter. So are they going to lower the corporate tax rate? Are they going to extend the prior tax cuts that were done the first Trump administration? What pro-business things are going to be done? What department heads in the government are going to be gutted, and who's going to get replaced, and what are their agendas? There's a lot that's going to happen. It's going to be sweeping across this country in the next 5 months. And so it matters to us. It matters to our interest rates. It matters to our economy. It matters to, what's going to happen. So got to keep an eye on it. Meanwhile, I am not a financial advisor. I am not responsible for your profits. Not responsible for your losses, only your profits. Stock market's ripping. It's absolutely ripping. $22 billion of inflows just into ETFs, which are exchange traded funds, kind of a tax sheltered type vehicle where, they'll invest. ETFs will, like it's an ETF that invests in technology, or maybe invest in the entire S&P, or invest in, consumer discretionary or whatever. There's all kinds of different ETFs for whatever sectors you think are going to do well, like, Bitcoin or consumer discretionary cyclicals. Energy might catch a bid. It's been lagging quite a bit. These funds, they just buy tons of stock. $22 billion have flowed into ETFs just at the end of last week after the election. Stock market's ripping, all-time highs. Tesla's ripping, partly because, Elon's been backing the president, and he's got a lot of different government agencies that are trying to sue, his different companies, and there's a lot of conjecture that maybe those will get thrown out with the new administration. So it'll be interesting to see how these things play out, how the stock market plays out. I will say this, there's a negative side that we're seeing right now during earnings season. We're in the middle of earnings season for stocks, Q3 earnings season. So 80% of the companies are reported. 74% of them are reporting beating earnings. That means their net profit is beating analyst expectations. But only 61% are beating revenue estimates by analysts. That means the top line sales revenue is down. The average has been 69%. So there was a lot of fear about next year where earnings were going to be a little bit lower and maybe disappoint. And that could be a tipping point for stock valuations and the stock market itself. But the stock market's ripping nonetheless because of all these, seemingly pro-business things that are going to happen with the Trump administration. Of course, we don't know what's going to happen exactly until they happen. But that's what's going on in the stock market. So big news week. Obviously got meetings here the next day and a half. And again, happy Veterans Day. Thank you for putting a life on the line. And happy birthday to the Marine Corps. Have a great week. We'll get back to you on Thursday. Cheers. Hey, it's KP coming to you live from Culver City. We're at our construction job that we have going on here. And I'll give you an update on that. And inflation, retail sales coming out tomorrow. Chair Powell spoke today, so I'll give you an update on all things before you go rolling into the weekend. Okay, so this is the rooftop, which is badass. We're gonna have like a little planter box here, and then we're gonna put a bench there and a table. And what's funny is it's gonna look gorgeous. And when you walk into the open house, you're gonna be like, "Oh, dude, this thing's sweet." But you got a pool, like multiple kitchens, bar, TVs on the first floor. Will you be walking up 3 flights of stairs? I don't know. Maybe not. I have a place in Fort Lauderdale that I bought in 2003, and when the construction was done in 2004, we put a hot tub on the roof Thanksgiving week of 2004, and other than going to the hot tub, which was during spring break, which, the influx of spring breakers lasted about 3 months from February through April. But the only time we ever went up there. So I don't know who's going to use this, but What's cool is you can still see the Hollywood sign in the background. I don't know if you can get your little zoom in on that. There it is. It's right there. That's the Hollywood sign. Pretty cool. And Turning Point School, one of the most expensive and supposedly prestigious schools in Los Angeles County. Culver City is a suburb of Los Angeles County. It's its own little animal here. Okay, so CPI is out today. Now, that's not the Fed's preferred gauge of inflation, which is the PCE, personal consumption expenditure. That will come out, obviously, at the end of the month. But CPI and PPI locked together, they're like that, they can give you a pretty good idea what PCE is going to be because of the inputs that go in there. So let's talk about it. So CPI came in at 0.2%. Then there's the core reading, which strips out food and energy. Remember, energy has been low. All the other components in the CPI, other than shelter, which is like 65% now, I read, of the CPI Consumer Price Index. Used to be like 44%, 45%. It's a huge component of it because everything else is down. So you take out auto insurance, which inexplicably went up 30% in the month of October, a month-over-month increase, adding like 6 basis points to that reading. It's a lagging indicator too. The Manheim Index is the used car wholesale prices, and that number's down. It's tremendously down. I think it's only up a pretty low percentage. So Tom Lee from Fundstrat Advisors, which you see him, is an awesome Japanese dude on CNBC all the time. I pay money to his services, and he said that's a distortion, that used car increase in October, and that will smooth out. So 6 basis points should come out, and that will go away at some point. In addition to that, he said like the median input price for all the CPI units is only 1.86. So a lot of these components are way down. Fed Chair Powell has acknowledged that there's a lag effect in the shelter prices. So they're trying to time the cuts as those components come out. So we're at like 5% year over year on shelter inflation, and the CPI that's down from 5.1% the month before in the September reading. Anyone watch Jurassic Park? We just put tar on our roof. So maybe in 1,000 years, the DNA from that dragonfly will save the planet. I don't know. But the lag effects of like new rents that are lower versus renewals, owner's equivalent rent, which my good friend Barry Habib, love you, praying for you, you're my man. I think you look good with no hair, dude. You look younger. I can't wait to see you, brother. I love you. I was texting with him this morning. He pointed out something very interesting in those numbers, that new rents are way down, and we all know that, and that's been acknowledged by Chair Powell, who even spoke on that today in New York. He had he reread his statement to a bunch of students, and then he had a fireside chat. I think it was something Campbell. So inflation is still falling. It's falling. It's going to continue to fall. The PPI, the Producer Price Index, came in today, Thursday. CPI was yesterday. Retail sales is tomorrow. The PPI was up. I think we went from 1.8 to 2.4% just in a month. But there's a huge increase in the cost of managing portfolios. So you talk about the stock market ripping, and all these accounts are higher. So those fees, like 1% or whatever it is that money managers charge, it was huge in October because the stock market is ripping. The stock market's up like 44%, the S&P 500 index, year to date. I mean, we could fall 22% in a huge bear correction and still be up 22% year to date. That's crazy. So, money market managers and money managers, their input cost isn't really inflationary for our society. So what happened? The odds of a December rate cut of 25 bips went from like 55% to 82%. After that reading, are you one of those people who've been talking about inflation? Remember in Q1 this year, oh, inflation's up, it's here to stay, it's sticky. Yeah, it was sticky. It goes up and down, and there's weird inputs, and used car prices and food prices and your stock portfolio price, and auto insurance was a big one in the CPI. But over time, those things smooth out, and inflation has done nothing but come down all year. It's done nothing but come down. So unfortunately, I was wrong. I thought the 10-year Treasury would see through all that, but the bond market's taking advantage of it and demanding a higher yield, especially with the stock market ripping. So our rates are suffering right now. But again, I believe it's December 18th, this next Fed meeting, where they'll have a dot plot. They'll have the summary of economic projections, aka the dot plot, and they will say how many more cuts they think they're going to do. They might do a little bit less, but the market has corrected for that. The market is only pricing in about 100 basis points more, or 75 basis points more of cuts total. And that could change. For example, if GDP slows down, job growth slows down. Jobless claims came out today, and they're pretty low. I think 218,000 jobs. Continuing claims still remaining elevated, above 1.8 million, 1.9 million in that range. So it's harder for people to find jobs. That is a weakening, but not crashing job market. And that is a no landing or a soft landing, if you will, not a hard landing. Retail sales will tell us what consumers are spending tomorrow. That is one piece that could be the surprise that we don't know about in inflation. Will goods and services inflation reignite? And the wage inflation still continues to grow. And because of that growth, there's potential for goods and services prices to reinflate. But for now, no problem. It's not happening. Okay, so I got here, met the GC that my buddy hired, Travis, Diego. These guys are working their butts off. So I threw in his in. I used the outhouse. I felt like a real construction guy for about 30 minutes. These guys are rocking it over here. This is, there they are, they're over there. Look, I'm hiding. They don't want to be on camera. So this is the primary. It's coming together since the last time you saw it, the day before I flew out, the Thursday before the Texas-Georgia game, where Texas lost. Those shoes went 0 for 1. But we put in some soffits up here. You can see that. We put in some AC ducts. We started sealing the roof. You could hear my feet sticking around up there. My partner Jason was really worried about us not getting the roof sealed before the rainy season, and he's pretty confident we're going to beat all that this year. Our last project down the street, which you can see over here, it's that White House. We had a 90-day delay because we had rain and we couldn't put the roof on. And we had some leaks, and it cost us 90 days. And so we're not going to have that problem here this time around, which is great. And so that will make things obviously move along quicker. The two houses next door that they're also working on, this one and that one, they got the windows in, as you can see. They've got drywall up. So when you get drywall up and the windows in, it's a huge step in construction. So we're going to seal the roof this week. We get windows and doors delivered Tuesday, and then we have another slew of $50,000 deposit of windows and doors that we're going to put on, in the coming weeks. So that crew that rolled, all the drywall and the windows and doors, they're going to roll over into this next week and start doing that here after we seal the roof. Then we'll get this damn scaffolding out of the way and get a pool dug in right there. There's an ADU. California is leading the way in ADU legislation and guidelines. It could be a guest house. You can rent it out. You can put your in-laws there, or you can just have a party pool house. So this thing's coming along. It's going great. Again, retail sales out in the morning. That's going to be big. A good measure of how how consumers are doing. Remember, GDP is 70% consumer spending in America. Okay, I am walking down the metal part of these floating stairs, which were not in the last time I did this. And so this is actually going to have wood on, let's see here. So these stairs right here are going to have wood planks put on them. Have this whole floating stair look. It's going to be pretty cool. And then on the fly, my genius award-winning architect partner, he wants to put like a little water feature here, like a little pond that goes outside and inside, have a recirculation pump. So that's all. It's all coming. So this thing's coming along, and we'll get another update out here in a couple weeks. The 10-year, 2-year Treasury spread did not re-invert. There was some talk of that with this, bond craze that went on here with 10 years and 2 years going up. Got, I think, as low as 7 basis points uninverted. Did not invert. Which, remember, is a sign of a recession. When people feel the short-term risk is larger than the long-term risk. Now the risk is that we have too much debt and deficit, too much interest payments, and we're seeing the yield curve bear steepen, as they say. So long-term bonds are taken off the 30-year long bond as opposed to the 10-year note and then the 2-year and under bills. So we're going to watch that. Excuse me. I think once we get that dot plot December 18th, they'll bring some more certainty. There's a lot of uncertainty what the Trump administration is going to do, what they're going to spend. There's a lot of talk about tariffs, which, by the way, is, like I mentioned in my Monday night video, the thing we know the least about, right? So are they going to cut costs? Is Doge, the Department of Government Efficiency, Dogecoin, Vivek Ramaswamy, and Elon, are they going to be able to cut $2 trillion out of the next 10-year budget? That's good. If they can get some of the debt and deficit down, they're going to create a more efficient government. God bless them. I mean, they're not really in the Office of Management of the Budget, which Doug Eakin from the Daily Dish pointed out this morning. So, they're going to make recommendations, but at the end of the day, the Congress and the White House really have final say, and they're the ones that decide, what's really going on. So here we go. This is it from the street. This is the projects next door. They have drywall and windows up, and then after we get the roof sealed up there, we will put windows up next week, and then we'll have drywall coming. So I'm headed to a dinner with Slack, which was purchased by Salesforce for $28 billion. And then at 7 o'clock, you may have seen my midweek post, a rare midweek post for me, Mesa, which is a homeowner-oriented credit card rewards platform. When you make your mortgage payment, you get reward points on the Visa. So check out my last post. You can see what that card looks like. It's a beautiful white metal card that says homeowner, which is an absolute privilege that 2/3 of our country has earned. And the average first-time home buyer spends $15,000 to $60,000 in the first year. So why not take out a Visa? So originators, servicers, you're going to hear a lot about Mesa, not just from me, but throughout the industry. We think it's a great way for you to get borrower engagement. Think of all the drip campaigns, the emails, the calls, the direct mails, your mortgage statement. But what do you engage? FinLocker, fantastic way to get your financial fitness going. Think about what you look at more than anything, your freaking credit card. Your main card, which is sticky, which you almost never cancel your credit card. You're going to look at every single purchase you make in there, and it's all geared around home ownership. So they have a launch party at 7 that I'm going to after Rowdy Gaines, U.S. Olympic swimmer and announcer. If you've ever watched any swimming on NBC during the Olympics, Rowdy Gaines is the voice. He's the man. Get to go hear him speak here at 5:30. It is currently, it's about 4:20. So going to go see them in Beverly Hills, and then the launch party there. And then I go to Barrett Financial has a sales rally tomorrow, and go there, out and back in Phoenix. And then I go to New York for Inman to moderate a panel next week, Inman, New York. Have a wonderful weekend. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.